Alrighty, traders. Welcome, welcome, welcome. I am doing this video today, or live stream today, for you because I want to share with you. Alrighty, traders. Welcome, welcome, welcome. Oh, geez. I am doing this video today, or live stream today, for you because I want to share with you. There's a bit of an echo there. What I'm going to do today, guys, is I'm just going to share with you what I see in the markets and what's going on just basically what's happening with the overall markets itself. I'm going to be looking at the silver and gold stocks. I'm going to be looking at the silver and gold market itself. And I'm also going to be sharing with you, let's see here, make sure that we are good to go. Yep, fantastic. All right. And I'm also going to be sharing with you, the indices and what's happening with the indices and to help you guys look forward in the markets today. So if you guys can just give me a yes in the chat box if you can hear me okay, and all that sort of stuff, and I'm pretty sure we will get going in just a few minutes. Now, what I want to do is, as I said before, guys, I just want to give you a really good update on this live session, and also do a bit of live Q&A. I do really enjoy doing these live Q&A videos, or the live Q&A sessions, and also I really enjoy helping you guys out. So let me make sure that you guys, there we go. So there we go. Hey, Peter. All right, fantastic, guys. So just give it a couple more minutes, guys. As I said before, in this session, I'm going to be sharing with you what's going on in the markets right now. There is so much garbage out there right now in the markets, and I want to share with you what's been going on with the stock, what's going on right now with the stock market, what's going on with silver and gold, what's going on with the silver and gold stocks, and why have I talked about things I've talked about in the past on this channel. And so that's what I want to talk to you guys about in this session here. Now, before I do start, guys, I'm giving away a free trading course. If you guys haven't got access to that yet, go to freewbstraining.com, freewbstraining.com, and you can put your email address in there, and then I will send you that free trading course. About 10 videos, 12 hours long. And that's going to really help you. If you're struggling in the markets, that's going to help you get started in the markets as well too. So we will just give it just another minute or so, and then we're going to get straight into the markets. And so before I start, guys, what you're looking at right now is you're looking at my screen right now. And obviously what you're looking at is I trade Forex, I trade futures, I trade stocks, I trade options, I trade these different markets out there. And so what you're looking at right now is my Forex and futures and commodities platform, which what I used to trade with, and then I'll be bringing up and looking at the actual market itself. So anyway, guys, let's actually get straight into the session today, guys, and I want to share with you what I'm seeing in the markets. Firstly, guys, do not, guys, this session here is only general advice only. I'm going to give you my predictions, and not a prediction. I'm going to share with you what I'm seeing from the charts and what the charts are telling me on where these markets are likely to go. Okay, so this is just education only, and past performance doesn't equal future performance. I'm not giving you financial advice right now. Obviously, there's so much more that goes into becoming a really, really good trader. So let's get straight into the session today. And let's actually get started. So once again, guys, this is the session here. So a lot of people ask me, say, what do I do with my trading and so on and so forth. Firstly, I trade all the US pairs. So AUD, USD, Euro, USD, Great British Pound, USD CAD, USD CHF, and USD Japanese Yen. I also trade the AUD JPY, EUR AUD, GBP AUD, GBP NZD, and Euro JPY. So I trade a lot of different currencies there, a lot of different Forex, the Forex market there. And I also trade silver and gold, and I also trade the DAX, copper, oil, and also the US 500 cash futures market as well too. So I trade these guys every single day, and what you're looking at right now is just one of 4 screens of mine. So one of 4 screens. So what you're looking at right now, to the left is a 5-minute chart, and to the right is a 15-minute chart. And on my other screens, I have an hourly, a 4-hourly, daily, and weekly charts. And I'm looking at these throughout the day in the morning. Mainly my time, I am trading from around about majority of my trading on the Forex market is done early in the morning, which is around about that 8 o'clock time. That's where a lot of the volume comes into it. And then also in the afternoon, say 3 o'clock through to 4 p.m., somewhere around about there. A lot of volume starts to come back into the markets, and there's some trading opportunities there. So that's where most of my trading is done on the Forex market. And then late at night, that's obviously when all the other things really kick in. So 5 o'clock onwards, I start to trade a lot of things like this is like high grade copper. So I trade a lot of copper, things like the DAX as well too, and so on and so forth. So that's what I do there. Now let me actually continue here now, guys, on to the session. So let me actually bring up this one here. So I use this software, which is actually connected to my brokering platform, which is I use IG. For people here in Australia, maybe even overseas, I use a platform called IG, which is and then this program here is called Pro Real Time, and Pro Real Time is connected into IG, so I can trade straight from this here and then go from there. So let me now bring up my TC2000, which I do all my stock and options trading on when it comes to that as well too. Now, one thing I want to share with you guys is, what I see what's happening right now in the stock market, and what I see what's happening right now in the silver and gold market, and also the silver and gold stocks market. That's one thing I want to really focus on. Now, it's so important that when you are trading the markets, that my opinion doesn't mean anything in the markets. It really doesn't. It doesn't mean jack shit. It really doesn't. What matters in the markets is what the charts are telling me right now, and that's all that matters. Okay, so firstly, let's actually go look at the Dow Jones. Okay, now last week I put a video out last week, and I said that I said that I see the Dow Jones going through a bit of another move, and I actually have a 29,000 Dow projection. And I saw that, and I did that video last week to say to you guys that firstly, this is where I see now the projection is based on the charts. Okay, I have a simple analysis of how I look at these markets, and once you understand how these markets work, which is how they truly operate, you can see that I use that 29 projection is based from the charts. It's not me just plucking a number out of the thin air. Is I use that based on what the chart's telling me. It's not based on an indicator or stochastic or a MACD or any of that garbage, okay? Once you understand and once you get good and once you get a lot better at really mastering the art of technical analysis, of trading the markets, of trading what the chart is telling you and deriving what is the market really telling me right now, not just based on a candlestick, right? I don't believe in just reading a candlestick pattern or reading the last couple of days. That may be good for the short term, but I want to see what the overall picture is telling me right now and where this is going. And based on a very powerful pattern that forms in the markets and exactly how the markets work, I now have a projection of 29,000 based from the charts. It's not my prediction. That's not what I think it's going to happen. It's saying, okay, this is from the charts. Now, as you know, from a technical analysis point of view, it doesn't always go that way. But right now there's an 80% chance that the market's going to go to 29,000. Now I must say, I'm not telling you guys to go out there and start to buy options on the DIA or the SPY and ride this thing up. Okay. Because we're going to have pullbacks. I don't know, this thing could pull back to 26,000, 25,000, 25,500 before it rallies back up again. Okay. That's what I'm saying now, but I do have an overall target before we actually go through this crisis, and we're going to go through a crisis. Okay. It is just going to happen. We see this all over the book. All over the place. And if you guys haven't read Ray Dalio's book, Understanding the Big Crisis, that book, I think that's actually what the title is. I've been reading it lately. Then I recommend you going watching that and going reading that and studying how these cycles work. Right now, we're not at the top yet. Okay, we are not at the top of the market yet, and that's not based on my opinion. That's based on the facts of what's happening in the markets right now. Okay, and again, go read Ray Dalio's brand new book, Understanding Big Debt Crisis. And when you read that book and you see what happened in 1920 in Germany, 1929 US and 2008, you'll start to see where we are right now in the cycle. Okay, it's all about the cycles. Now that's the fundamental that's the fundamental of where we are right now in the overall cycle. We are not at the top of the market, not just yet. Okay, and one of the big key indicators that I got from the Ray Dalio book when it comes to the fundamental basis. Now, again, guys, I trade the charts, okay? The charts are telling me right now, we're getting ready for another big run, and we're going to hit 29,000, possibly even 30,000. That's what the charts are telling me. But when I read Ray Dalio's book and I say, okay, what's happening right now? Where are we right now in the cycle? Guess what? We're nowhere near. We're nowhere near the actual. We're nowhere near the actual top of the market. And one of the reasons why I say that is one of the things you look at when you're talking at the top of the market is so many people are so bullish on the markets at that time. If you look back at Bitcoin days, you know what I mean? Like so many people are bullish the market. Now the thing is I look at so many people that when I put a video out and I've done surveys with my list, and I said, what do you think is going to happen in the markets? And so many people are looking for bearishness in the market. So many people right now are still looking for that double top, or they're still looking for that crash, or still looking for all these different things in the markets, which to me is just ludicrous, because based on when you read when you understand the cycles of where we're at right now, and also you know how to read the chart properly, none of those things spells crash. None of those things spells crash. Because there's so many people still bearish in the markets. And if you want to be a smart investor in these markets, a smart investor, okay? Now, investor is simply means that, you know, that you're looking for cycles, you're looking for long-term positions in the markets. You know we're not there yet. You know we're not at the top of the market yet. And by understanding these cycles, you'll see where silver and gold fits into that as well too. If you understand how the markets truly work, then you start to say, okay, where is the silver and gold stocks lining up right now, and what's likely to happen based on this, based on where we are right now. So right now in the cycles of where we are in this big debt crisis cycle, we are nowhere near the top. You can either fight this or you can go along with it. Okay, and so many people right now are still trying to pick the top of the markets. We're not in the top market. When everyone is overly bullish, that's when you want to start to get very fearful. Right now, I have so many people on my channel telling me, and so many people coming to me and still looking for a reason for this thing to crash right now. It's ludicrous. Now, it's not ludicrous to me. I did a thing on my YouTube community channel, and I actually said a while ago that I am more bullish now the stock market than ever before. I am more bullish the stock market now than ever, or I should say, I am more bullish the stock market now than I have been the entire year. From basically February right through to if I look at my charts right now, you're looking at a Dow Jones to the left. This is actually a widescreen you're looking at right now, guys. 35-inch widescreen. That's why I got two charts. But during this period here, I wasn't sure because the charts weren't giving me a good clear signal. It was just in this sideways consolidation. I needed to see a breakout. I needed to see a confirmation of a break to see where this is likely to go. But once it did break, then once it did start to break and we had a confirmation break, not a false breakout. Then I said, okay, cool. Once it starts to break out, now I can start to say, okay, the charts are telling me this is where it's likely to go. And because we did get a true breakout to the upside, it wasn't a false breakout. A false breakout is you get to the upside, you hold it, and then you break back down. And then when that happens, you generally go to the bottom of the actual market itself. But it didn't. I actually kept creating higher lows and higher lows in this market here. Now, if I go back to say an hourly chart through here, and let me just open this chart right up here for a minute. Let me just do this here. Yeah. So if I look at the actual charts, because it's confirmed, because with this actual market here, what's happened is that it's actually confirmed a breakout to the upside out of this sideways range. And once that happens, okay, once that happens, I now look at this time frame and it gives me a projection of 29,000 on a conservative, and then more of an aggressive target is 30,000. So I have a range of 29 to 30,000 of where this market is likely to get to before we see any top of the markets. That's what the charts are telling me. Again, if you go back and read Ray Dalio's book, you'll be able to see where we are right now in the cycle, and we're nowhere near that. So please, guys, please, For you guys that are watching live right now, or for you guys that are actually watching the replay right now, please do not fight this market. Okay, now I'm talking about the Dow Jones, which is the Dow Jones, and I'm talking about silver and gold and all that sort of stuff. Okay, I'm not talking about individual stocks, because individual stocks can be going down, and you know I'm actually benefiting right now. I'm actually in a few profitable bearish trades right now. So this is not for all stocks, but when we talk about the Dow Jones and the S&P and those sort of markets compared to the silver and gold, compared to silver and gold stocks, please guys, please don't try and fight the market. Okay, I am nowhere near smart. I'm not the smartest guy on the planet, but what I do is I go to people like three of my mentors who makes multiple 7 figures per year from trading, private traders, and I say, okay, tell me what you know about the markets. Tell me how you trade the markets. Tell me how you view the markets. And when you start to adapt these mentalities or the way you view the charts based on my over the last 10 years, I've had three private coaches, private traders, and they all make multiple 7 figures per year. It's not that they're lucky. And my current coach right now that makes multiple 7 figures per year, who has really, really helped me when it comes to the Forex trading as well, and when it comes to the stock market and understanding the stock market even more, 25 years he's been trading now. Multiple 7 figure year trader. Private trader, one of the most, to me, is up there close to one of the most successful private traders on the planet, I would say. Private traders, not a fund manager or anything like that, but personal private trader. Right? Few $100,000 at least per month on average he'd make. Now, some months it's quieter, but on average, it's that's what he make. It's not that he's lucky, okay? And so I go to these people, it's like, okay, tell me what you know about the markets. So teach me how you view the charts. Teach me how you understand the charts. Teach me how you understand the markets. And then that's what I want to know, because I want to get better. Not only that, but then I say, okay, cool. If I want to understand right now where we are right now in the overall economy, guess what? I'm going to go to the most successful hedge fund, the successful hedge fund trader in the actual market itself, in the overall economy. And who is that? Ray Dalio. And so when I start to combine these two things from the most successful hedge fund person, manager on the planet, and then I go to what I believe is one of the most successful private traders on the planet, you start to get a much, much clearer picture. Guys, trading is simple, it's easy, it's fun. And if you're telling yourself something different, it's because you're fighting the grain. You're fighting it. And now, unfortunately, there's a lot of bullshit and there's a lot of garbage out there that teaches you these things of what to focus on and how to get ahead in the markets and what you need to do. And you need to focus on all these indicators and all that sort of stuff. It's like, no. All those indicators, as you can see from my charts, right? This is all I focus on. This is all I trade with. 2 moving averages, volume, and a long-term time frame. That's all you need. That's all you need to get ahead in the markets. Trading is simple, it's easy, it's fun. Trading is simple, it's easy, it's fun. And if you're telling yourself it's hard, it's because 1, you actually haven't done the work. 2, you're actually fighting the grain by using all these indicators that just are stopping you from moving forward in the markets. So once I learned from these multiple 7-figure traders, and I see amongst the last decade of my life of being coached and being mentored by 3 different multiple 7-figure traders, personal traders, I see what they have in common. I see how they view the markets. I see how they trade the markets. I see how they get in and get out of the markets. Now, they have different styles of trading, yes, but the way they trade the markets it's the exact same. And then I go to Ray Dalio. The reason I'm bringing up this foundation here, guys, the reason I'm bringing up this foundational information here is because so many people right now are fighting the grain. Do not fight the grain. You're not smarter than the market. I'm not smarter than the markets. So please, guys, please, if the market is continuing to step higher, do not be trying to find a reason for this market to crash. It's not going to happen, right? It's not going to happen right now. The only reason why it's going to, the only high probability it's likely to happen is when we start to go vertical, and we're not vertical yet. We weren't like we were last year. So please, guys, please, if you're looking to really, really get ahead in the markets, firstly, understanding how to read these charts properly and understanding the way these markets operate and what they do and the formations like truly operate. truly operate. It's none of this bullshit and garbage of reading a MACD or a stochastic or the RSI or any of these things that help you get in and get out of these markets. It's like, to me, that all those things just really slow you down of your true potential. So what I'm seeing in the stock market right now, and as I said before, guys, based on what I'm seeing right now go read the Ray Dalio book right now. In the Ray Dalio book right now, he clearly states the cycles and what happens in these cycles. He goes through the 1929 in Germany, 1920 crisis in Germany. He goes through the 1929 stock market crash and also 2008. When it comes to debt crisis, guys, we're nowhere near the top right now. Maybe in a few years' time frame, then we'll start to see a bit of a topping action, but we're not there right now. One of the biggest things you want to look at, guys, is what are people saying? What are people saying about this? If you seriously want to be ahead of the curve, be part of that small percent that actually do well in the market, then you got to be a contrarian trader or a contrarian investor. When everyone's really bullish, like they were with Bitcoin. And that's one of the reasons why late last year I did videos on Bitcoin saying, don't touch this thing. Right? We're not at that point yet. When we start to see the news media saying, oh my goodness, the Dow's rallied 10% this month, or 1,000-point gain, or stock market's gone crazy and on all this sort of stuff, and you can't lose money in it, and all like massive bullishness in the markets, that's when you want to get very fearful. But we're not there yet. Most people are still bearish, which makes me so happy, because literally 80% of my positions right now are bullish. And I've been bullish for the last month. I'm having a great time because so many people are like looking for the top of the market. I'm like, no, don't look for the top of the market. Now, there's obviously a lot more that goes into trading. You know, having your trading set up, knowing exactly where you have this stop, how to actually let your profits run, and so on and so forth. That's what you need there. But don't be fighting this market, guys, okay? Don't be fighting this market. Trading is simple, it's easy, it's fun. Trading is simple, it's easy, it's fun. And once again, guys, the market can really only go one or two, only can go two ways. It can either go up or down, or it can go sideways. Like, and we make it so much more complicated than it really is. And one of the things that actually stops us from getting ahead in the market is we wait for the market. This is understanding how the markets work. Is we wait for the market to run in that direction, then we look to buy it, and then the market pulls back, and we understand why did I get stopped out? Well, why did that happen? Is because it's how the market works. It works in waves. It flows, peaks and troughs. You know, higher highs, lower lows, all that sort of stuff. The market works. So if you're looking for a probability area to get in the market, don't wait for the market to go up for 4 or 5 days straight in a row, then get into it. It's like, no, that's once you understand the foundations of what the market's doing, we're now likely to see a turning point at that time. Or don't wait for the market to drop 4 or 5 days in a row, then short the market. It's like, no, you've missed that time frame. Trading is simple, it's easy, it's fun. And you've got to really drill this into yourself. It's like, okay, really drill it into your mind, that if you truly believe that trading is difficult, trading is hard, then that's what it's going to be for you. You truly can do really well. Right? You can do so well from these markets, guys, and I truly believe in you. But there's so much garbage out there right now. There's so much BS out there right now. My first earliest millionaire mentor said, John, seek truth regardless of appearance. Seek truth regardless of appearance. And seeking truth of the markets is, what is the market telling me? You're not smarter than the markets. So stop trying to fight the market. Respect the market. What does that mean? If the market is making higher lows, and we see on this right now, on this Dow Jones chart right now, okay? And we see this market making higher low, and slight little higher low through here. If we see that, then don't be trying to short this market, because the market is telling you what's going on. Don't fight the market. Respect the market. I'm not smarter than the markets. Remember, this is the big guys who knows what's going on. And one of the most important things is that if you want to look for a high probability trade that has the potential to run on for 4, 5, 6, 7, 1,000 times your risk, or 100 times your risk, guess what it is? It's always trading with the underlying direction of the trend. Now, what does that mean? If you go back and look at this, weekly chart here, okay, you can see this weekly chart to the right. And I know this sounds basic and sounds simple, but the highest probability, for me personally, I am always looking for trades that are going to give me the potential of seeing some really, 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 really big profits compared to my risk. So if I'm trading an option and I'm accepting, and I trade say 5% of my account, and I say, okay, cool, I'm accepting 100% loss on this. I'm accepting 100% loss on this because I'm maybe trading out of the money options. I say I'm happy risking 100% loss on this one trade, but I know that the positions I take, 8 times out of 10, I'm going to make 2-3 times my profits, and at least 50% of my profits, 50% of my profitable trades, I can make 500%, 1,000%. There's a recent trade that happened just recently that using this one technique I'm about to share with you. There was one trade just recently that ran on for over 1,500% return. Now, I'm always looking for trading opportunities that can potentially do that again. You know what I mean? And I'm looking for that. And what is the biggest thing that's going to help you have a much more higher win-loss ratio is trading with that higher time frame trend, no matter what market you're looking at. And so as you can see here, right, if you look at this Dow Jones, ever since the start of 2016, what's the market been doing? Higher low, higher low, higher low. It came down, it made a low. It made a slight little higher low, double bottom, and then it made a higher low and then ran up. So as you can see, right, and this is all about reading the market for what it truly is and going with that. If you want a high win-loss ratio, always trade with that higher time frame trend. So when I'm trading a daily trade on the stock market and I trade options over the stock market, I'm always looking for that weekly chart because I always want to make sure I'm trading with that weekly chart. If I'm trading against that weekly chart, you're going to have a very bad win-loss ratio. That's the starting point there. So I'm always looking to trade there. So right now I'm looking at the Dow Jones. There is nothing out there telling me this market's going to crash. The markets continue higher, and stop trying to think you're smarter than the market. Just because we're at a bit of a double top right now doesn't mean we're going to get a bit of a pullback. Guess what? Everyone's looking at that double top right now, and I guarantee you that there's a much more high probability chance of this thing breaking up and then going for a big run once it really breaks this level through here, this double top level. There's a very, very, very high probability chance of this thing now going for a run. So, you know, it's so important, guys, to actually look at that and see what's going on through there when it comes to, you know, when it comes to the markets there. And that's the same for the S&P 500 as well too. And so this is the same for the S&P 500, and this is the same for the NASDAQ as well too, okay? Don't fight the market. Respect the market. Respect it. Don't fight it. Don't fight it. Don't fight it. All right, so that's what I see there for the stock market there. Let me go share with you what I see with silver and gold right now. Now, if I go back to the actual silver chart itself, this is the actual silver market right now. What do I see here right now? Right now, I see this market's had a really big, strong drop down, and now we're getting a little bit of a short rally up here. I'd be very, 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 very surprised when it comes to this silver market for them not to break this 2016 lows, because there's probably a lot of there's so many people that have their stop down here below these lows through here that it's crazy for the market for them not to drop down there and run those stops. So it's to me, when it comes to silver and gold market right now, it's like, again, don't fight the market. If you look at this market right now on silver and gold, once again, guys, when I'm looking at this pattern here, this silver and gold, okay, if you think about the market as in energy, okay, once you think about this market as in energy, when the market goes sideways, it's building energy. It's building energy. And the longer it goes sideways, the more energy it builds up, the more it has to then run in that direction. So if we spend, like we did here, a good 12 months going sideways, and then we have this drop down here with a couple of months, then a good, as you can see right here, when it comes to this energy, we had so much energy built up on this weekly chart that silver and gold dropping down here. We're now getting a little bit of a rally, but this longer term chart has completely changed now. We have major sellers in control. So again, if you're looking for high probability trades, respect the market, don't fight the market. And what does the chart tell us right now? Not what I think or hope or fear. Right now, we're saying the major sellers are in control of this weekly chart. We may get a little bit of a bounce on this daily chart, but the highest probability trades are going to be with the underlying direction of that trend, which means the higher time frame trend. It's so important to look at that. Now let's go have a look at gold here. Gold was the exact same thing. If you look at gold here on the daily chart, this is one thing that actually made me start to go a lot more bearish. Look at all this sideways here. Look at all that sideways period through there. All right, we had a lot of sideways period. And look at this here. Then we actually broke down. And right now, actually, when we actually broke down, I was looking at this here, and I said, okay, if when we actually break down, if we actually get back above this point through here, I was looking at this point right here, and I said that if we get back above this basically box right now, this is going to be a false breakout. But due to the fact we hit it and then we started to reject it through there, that told me now that, guess what? One, we had a lot of energy built up, and now we're likely to go for a bit of a run in that direction. Energy was built up, and then we went for a run in that direction. Now we're having a little bit of a pullback because we now had what? We now had a lot of energy built up, and now we've used a lot of that energy. Now we're just resting again. We're refueling again. We're now building up a lot more energy to go for another run again. So there's nothing in this markets right now that's saying bullish gold and silver. There is just not. And again, guys, it's not my opinion. It's just respecting the markets and going with the markets if we're looking to trade, okay? Investing is a different thing. If you're looking at averaging and stuff like that, that's obviously a different thing there, okay? Now, the exact same thing that I'm talking about here, guys, when it comes to energy in the markets. Now, what I mean by that is based on the GDX and the GDXJ. We spent so much time going sideways through here, from here to here on this the GDX and the GDXJ, the gold stocks, that guess what? We spent so much energy built up. We've only had a little drop on this weekly chart compared to how much energy we actually had built up here. Guys, don't take my word for it. Go back and look at these markets when they go sideways for quite some time, and then they start to break out, and it's a confirmed breakout, meaning it doesn't break out, then go back in, it breaks out. When you start to analyze the market in that way, not stochastics or MACDs or any of this other stuff, but when you start to really analyze the markets in that way, as it's okay, who's in control? Peaks and troughs, highs and lows. Who's in control? What's the higher time frame telling us? And what's happening right now when it comes to the energy? Are we using a lot of energy, or are we building up a lot of energy right now? Is the market resting, i.e., it's refueling the energy that it's got, and it's getting ready to go for another run? Or are we actually using a lot of energy and we actually are going for a run? Now, the thing is, guys, is that the market needs to be balanced. And if the market goes for too much of a run in one direction, i.e. like what we saw in the stock market, like what we saw in Bitcoin and all these other markets out there, even Facebook did it before the big crash. When the market goes for too much of a run and it uses too much fuel, guess what? Now it's now what's happened. I just look at the questions. Manny T, you lost my thought, man. So I guess what I'm trying to say, guys, is that the market needs to be balanced, okay? And whenever you see the market go straight up, like we saw even on 2016, right? We saw a vertical move. When the market goes vertical, right? When the market goes vertical, or when your stock goes vertical, like we saw in 2016, that needs to be a warning sign that we're using too much energy right now, and we're getting ready to run out of that energy, and it's happened too quickly, and now that energy process needs to catch up again. If you think about the market as energy, it uses a lot of energy, and then it refuels. It uses a lot of energy, it refuels. And sometimes, once again, guys, if you look at the market as in that, okay, right now we've got so much energy built up in the silver and gold stocks, the GDX here right now, and the GDXJ, same thing, that we've only had this little drop down right now. So to me, based on this energy that we built up, I have a 2016 low broken. So the $13 broken on the GDX, and once again, even on the GDXJ. Like, look at the GDXJ here. Like, if we see all this sideways movement that we actually had here. Look at all this energy built up, and we've just actually had a small breakout on the GDXJ. The GDXJ itself has so much more energy, therefore we're likely to go for more of a run. Right? And again, if you go back and look at the actual the gold example that I gave you just a minute ago, guess what? When the market builds up a lot of energy, and then it starts to break out, guess what? We're now likely to go for more of a run. And based on the energy, you have a high probability of where the market is likely to go based on that, how much energy is built up in the markets. Just look at the way the markets work, guys. Okay, this is the no bullshit thing you need to understand about how the markets work. If I go back to the Dow Jones, let's go back to the election here. Right, forget the whole Trump rally and all that sort of bullshit. Right, let's go back here for a minute. If you look at what actually happened here, and let's look at this from what the chart was telling us here. Look at from here to there. Look at all that energy that was built up on the markets. Sideways for 2 years. All that energy was built up. So when we actually did start to break out, and we start to go for a run out of this here, and it was a confirmed breakout, not a false breakout, guess what? We now had a lot of energy that was built up. A lot of energy built up, and now that energy is likely to be released. And based on that energy, you can now actually project to see where the market is likely to go to. Now, guys, give me a yes in the chat box if you're getting what I'm saying here. This is the shit that matters in the markets. It's not the indicators or the CNBC or all this other garbage out there, right? This is the stuff that really matters when you start to see what the market's doing as in an energy. This is where the market is. This is how the markets really operate. It's based on energy. And when you see the markets building up a lot of energy, guess what? The markets are really getting ready to release that energy. And when we start to get a breakaway from that energy, now we can start to see this market actually starting to move in that direction. It's based on energy, guys. And that's what I'm saying. And that's why right now on the stock market, guess what? Right now on the stock market, we built up a lot of energy, didn't we? From here to here, look at all the energy we built up, and now we're going for a rally. And again, I now based on that energy field there, that energy section there, I can now project to see what a very high probability of where this market is likely to go to based on this energy field. That's the reason why when the market does too much energy and it goes vertical, that's when you have a bit of a counteracting in the markets. It's based on energies. So if you look at it, just say, okay, whenever you're about to get into the markets, okay, have we been using a lot of energy already? Meaning it's been going up for quite some time. If so, don't buy the markets. Have we been using a lot of energy going down for quite some time? Yes. Okay, don't short the markets. Why? Because we now have a high probability of a pullback or a sideways phase, also known as now building energy again. And now we're ready to release the energy, build the energy, release the energy, build the energy, release the energy. So if I look at, once again, guys, if I go back and look at the GDXJ, right now the energy field that actually happened tells me we're now getting ready. We still have like a very high probability chance of these at least these 2016 lows being hit. Now, guys, obviously it's based on probability, as you guys know, and there's no certainty in the markets. So if GDXJ gets back above $30 and it gets up to say 32, then this energy field, this breakout now is a false breakout. This is breakout, and not only is it a false breakout, but that's now likely to be the bottom in the markets, and the energy field that's actually was building up here is now likely to be to the upside. So just going along with what the market's telling you. So right now the breakout out of this energy field was down, and because we had a lot of energy, we have a lot more downside. We have a lot more downside likely to come. But hear me out, guys. As I said before, based on how the markets work, if we get back above this 30 level, and we really start to race back above, say, 32 level and so on and so forth, and we get back above that level, that tells me this is a false breakout. And now not only is it a false breakout, but we're now likely to run back up to the top of the energy levels, which is up here, say 36. Not only that, but the energy field that has actually been building up on this chart is now likely to send silver and gold stocks to the high side. So you always want to be watching and gauging what the market's telling you and then going along with that. So right now, based on the charts are telling me as I speak right now, is that the energy field is telling me that we now have the energy that's been released right now is to the downside. So therefore, we now have a very high probability chance of the continuation of the energy being released on that downside. But if it doesn't, then you want to flow with that. Now, if people are looking, if I was looking to buy some, if I was looking to go bullish on GDX or GDXJ, same for the SIL or the SILJ. Guess what? If I started to see that, I'd be massively bullish on the silver and gold stocks. Now, this is GDX and GDXJ. This has got nothing to do with the AG and Newcrest Mining and all this other stocks. Now, they may follow along in suit with that, but it's based on the chart pattern. Okay. Based on what the individual says. So GDX and GDXJ right now, guess what's actually happening? We're breaking back down and now we're just going sideways right now. So if we continue down here and we actually break past these lows through here, guess what? That tells me this is a confirmed breakout now, and then very high probability of the 2016 lows being broken then. If it holds here and we get a rally back up, and we get back above that 30 level, up and say the 32 level to give a bit more of a confirmed break back above that level, this is a false breakout, and then the markets take off. Okay, guys. So this is how you read the market. Okay, I'm not saying this is how you trade the markets. This is how you read the market. And having a trading system that works around how the markets work, that's why trading can be simple, it's easy, it's fun. You just got to understand how the markets work, and secondly, have a trading system that can benefit from that. Same with the silver, the same with the SIL and the SILJ, or the SIL and SILJ. So that's where I see things going right now, guys. As I speak right now, I have a target of Dow Jones at 29,000 to 30,000. And as I speak right now, this is based on what the charts are telling me, based on the energy field that I just explained to you. Again, guys, don't take my word for it. Go back and back test this. Go back and look at when the market builds up a lot of energy, goes sideways for quite some time, like it did with the election. Guess what actually happens when you get a confirmed breakout in that direction? You'll be able to see what generally happens. You'll be very, very surprised. This is the stuff that matters. So, and then same with the SILJ as well too. Okay, so when it comes to GDXJ, SIL and SILJ, those indexes there, I see 2016 lows broken as I speak right now. Now that can change based on if this is a false breakout or not, based on what I was saying before here on the GDX and the GDXJ. But if we do break that, that's going to give me a confirmed breakout, and there's a very high probability we're going to continue breaking new lows. So this is again, the market is smarter than all of us. It's our job just to understand how the markets work and read the market that way, based on a buyer's in control, a seller's in control, meaning highs and lows. If no one's in control, meaning the market's going sideways, how much energy is actually being built up, and so on and so forth. So right now, as I speak right now, if you're look right now, the silver and gold market is in a very silver and gold stocks, those indexes right now are very, very, very bearish. And the stock markets, I mean, Dow Jones looks like it's going to have a nice rally, maybe even a Christmas rally this year, and it's going to hit that 29,000. So that's where I actually have a target right now, guys, based on what I'm seeing in the markets there. So let me go through a bit of a Q&A right now, guys, and then I'll finish up. And then I'll finish up this live stream. That oh, thanks for the likes, guys. I just realized you just had thanks for the likes. I appreciate that. I just saw you put all those likes on there, so really appreciate those likes, guys. Let me now go through. Some live Q&A. Just give me 1 minute, guys. Give me 1 minute. All right, guys. So I do a bit of a Q&A for you guys, and then I will finish up here. Now, please, guys, don't take my word for it, guys. On what you're seeing right now, okay? Again, just don't take my word for it, okay? What you want to do is you want to yeah, you just test what I'm teaching you right now, okay, guys? And that's how you're going to get better. Again, you're not smarter than the markets. My recommendations is look at the things I'm teaching right now based on these charts, the charting stuff that I'm teaching right now, and also go and have a look at Ray Dalio's book, and you'll see where we are in the cycles right now. Don't think you're smarter than the markets. Don't think you're better than the markets. Don't think you're smarter than anyone else. Go to the people who like Ray Dalio, who understand this stuff and where we are right now in the cycles. And we're not near the top right now. We're getting towards the end of the top, but we're not there yet. So let me now go and I will answer some questions for you guys right now. Let's go. How long do you hold a position for? Minimum and maximum time frames. The thing is, Peter, with me is that there is no the thing is, Peter, with me is that there's no rule. I don't have a certain time frame. When I'm looking to get into a position, I use things to say, okay, I now need to be out of this, try to cut my losses short. But then I also use tools to then to keep me in, to then potentially have a good chance of letting that profit be, 2, 3, 4, 5, sometimes, even 10 times my risk on that trade. So for example, as I said before, if I'm buying an option and I'm buying an out of the money option, and I'm saying I got 2 months worth of time here, I say, cool, I'm happy risking 100% of this option here. So therefore, I would ideally, if I was happy risking 100% of that option, just say I'm trading 5% of my account or 2.5% of my account on that, I'd ideally like to get into trades that have the potential to do 400%, 500% return on that money, even 1,000% return. And so I'm always looking for trades there, but I'm using tools such as the short-term moving average, like a 9. So when the market is running, I can use that and let the market tell me when it's a good time to get out. Not me think I know when a good time is to get out. Because every time I think I know when a good time to get out, you guys have been there before, right? It's like you get out right now, it's like bam, and then the market keeps running. Like damn. Right. So that's just, I get in on a technical and I get out on a technical. And as long as there is momentum, as long as there's strength in that move, what I call strength in moves, as long as there is strength in the move that I'm in and it is moving in that direction, then there's no need for me to get out of it. But but then I use things like that too. So yeah, I hope that makes sense. So I'm always looking to minimize my loss, which again, if I'm using options, a lot of the times I'm actually happy risking 100%. I'm happy risking 100% loss, but I trade a very small percent of my account. But I also do know a good 70, 80%, sometimes even 90% of the time, depending on the time frames and stuff like that, depending on how much I don't fuck around on the markets, meaning how much I actually stick to the good systems. So stick to the system that I know that works. I know at least 8 times out of 10, I'm going to make a very nice profit. And I know at least half of those are going to give me that 500+% return. It's just my job to wait for those trades to appear. I hope that makes sense. Great to hear you live again. What is the minimum volume you like to see on the strike price you select for options? Daniel, there is no minimum, but I definitely would like to see. Volume is not a big thing for me, but open interest. I'd like to see, say, above 150 open interest. That means there's a lot more than just me there. I hope that makes sense. The thing is that the American or international markets can do really well, and very often the ASX will go sideways or sometimes even down. Peter, once again, just go based on that. Go based on that chart. Okay, don't try and compare apples to apples. American market to the Chinese market to the Australian market. Don't try and compare apples to apples. What you want to do is you want to compare what's happening right now, and what I'm seeing on the charts right now. In fact, let me actually bring this this actually up here. This is the let me actually bring the Australian market up here. The ASX. Actually, let me bring this up here. Let me go to popular indexes. Popular markets here. So let me go here. Let me go to the ASX, and if I share with you what the daily ASX and the weekly ASX has been doing, you'll be able to see that we've actually changed trend right now. Now, what is the weekly chart doing? We're still majorly high stepping up, aren't we? So the market is still very strong to the upside. So you definitely don't want to be fighting that weekly trend, high low. So don't fight that weekly trend. But when we look at this daily trend, look what's happening through here, right? We got a low, we got a lower low, and look at this here. Look at these strong sellers, weak buyers, strong sellers, weak buyers. And what we're getting right now is we're getting a period of time, we'll get a period of resting, all right? Energy building up. If we get a big breakdown from here and we start to get a close below, say below this level here, we get a nice big strong down close bar, then that's going to be that low that's going to be this low over here on this weekly chart. All right, so let's go here. And this is the low on that weekly chart, which is right there. As you can see, so if that happens, then we actually could get a bit of a downside movement for a short term, right? For a short term. The reason why I say short term is because when the highest probability trades that have the highest probability chance of making the most points or most percentage return is trading with that higher time frame trend. So right now we're getting this right now. Right, it's actually interesting if you guys know anything about history. In May or June in 2008, this is exactly what it did. So May, June 2008, the ASX 200 actually made this pattern, and then we had a down bar. We had three strong down bars, and then the market corrected and kept going back up. So again, if you're trying to trade short right now, the Australian market, you're going against that higher time frame trend, and therefore it's going to be probably a short-term trade. Don't think you're going to make a massive, big, long run out of that thing and try to capitalize on a big trade out of that, because it's just the probability is not like that. So, yeah, you want to trade based on what the actual market's telling you, not based on what you think the market is going to do, or comparing apples to apples there. So I hope that makes sense. Let me now bring up the TC 2000 again. All right, cool. Let's go here. Hi, NASDAQ. Ray Dalio wants the market to crash so he can start shorting it. I wouldn't say that. NASDAQ, actually, he's been short a lot of the European banks, like I think it's DB, I think it is DB. But he's actually been short Deutsche Bank for ever since the start of the year, I'm pretty sure. So he's not waiting for the market to collapse. No, not really. Now when the market does collapse, he can time it well. And if you guys read anything about in his book, you'll be able to see how he actually saw the 2008 market collapse coming. Perfect time to collapse the markets. Wait there, sorry. People love AG. AG, what's AG doing right now? Let me have a look at AG. So I had a short-term trade on this one here right now. Wasn't a very, very strong weekly trend, but had a short-term trade in and out in a few days. That's where that arrow was there. But apart from that, there's no real true strong trend behind this, guys. You want to wait for a true definite trend behind it. So until this weekly chart starts to give you a definite trend in place, then there's no probability of things happening through here. So it may be dragged down if the GDX and GDXJ start to do what the market's telling me right now. Perfect time to collapse the market. It was a great time to buy physical AG. The last few weeks. Look how extended the Dow is. Lol. Actually the Dow is not extended. If you're looking at extended, look at the characteristics of late last year. That's extended. Right now we're slowly stepping up. Late last year we just went straight up basically. So yeah. Up 50%, way too overextended. Definitely not. Again, you want to base the market on what the market's telling you right now. And we're definitely not overextending the markets. No way we're overextending the markets. Again, if we're overextended, you'll see a vertical move. We're not seeing a vertical move in the markets. Late last year was a vertical move. Right now looks different to that. So that's what you want to compare it to. Hey, I just joined. You already covered silver analysis. Yes, Jonathan. Yes. The overall long-term picture for silver and gold right now is still very bearish. So investing so right now I'm still very bearish overall. Short term, you can get a little pullback because we drift that anyway because it's been going down for quite some time. But I do see those 2016 lows actually being broken in silver and possibly also gold. I wish they stopped printing money like confetti so you could get some real fundamental appreciation of what things are worth without the insane. You know, Peter, I wouldn't really worry about that, man. Like, who cares about that? Who cares if they print money or not? Like, it really doesn't matter. The only thing that matters is what the market's telling you right now and your ability to trade what's happening right now based on your proven plan. All that other stuff, who cares about that? Who cares if they stop printing? Because there's plenty of opportunities out there to make money from the markets. You just got to know how to spot them. I hope silver hits $10 an ounce. I'll go and buy a truckload of silver bullion. I personally would say that my general advice is wait for silver and gold to start turning around. Like stop trying to pick the bottom. I mean, if it does get to $10, who says it can't go to 8 or 7 or anything like that? It's like, oh, but John, it's like that, but that's what you think. Wait for that. Wait for the market to turn around, then jump on the bandwagon. Just because it goes down doesn't mean it can't keep going down. As we've seen that in the past, right? John, how do you arrive to your 29,000 target? Lewis, based on this sideways movement, based on this sideways movement, I use this as a projection, and the projection tells me that we are likely to, based on this sideways movement, we're now likely to hit 29,000, possibly even up to 30,000 on the Dow. So it's based on this sideways movement here. I'm not going to share that here with you guys because I promised my current mentor, who I'm getting coaching off, that I wouldn't share everything that he teaches me, but I'm just trying to share with you guys a little bit to help you guys out. But my current 7-figure trader mentor, I am not going to disrespect him and stuff like that. Things that I'm learning from him. I promised him that I wouldn't share this stuff, but I'm sharing with you just a little bit to help you guys out. And the information's out there, guys. I just can't share a lot with you. unfortunately, because I've made a pact that because he knows I do YouTube videos and he knows I do some private coaching and all that sort of stuff as well. And, you know, when it comes down to it, yeah, when it comes down to it, I just want to respect him and the amount of in 25 years of just really digging deep and understanding these markets. So that's the reason why I can't tell you how I get the projection from that. But I am teaching you guys based on some analysis that I can help you guys out there. Training. Historically, gold and silver are at their cheapest in December. I wouldn't be trading that based on that, because that's just a theory. That's just your hope that December is going to be a low point again. It's going to rally again. Please don't do that. When you get into the markets, guys, remember, when you get into the markets, based on a probability. Trading the markets for an income is based on probability. That means trading for an income is based on a probability. That means probability means you're going to have a loss ratio. You're going to have a win-loss ratio. And the only way for you to have a consistent good win-loss ratio is for you to take the exact same pattern every single time. So you can have a constant win-loss ratio, right? Because as we know, there's no guarantees in the markets. There's a probability. And if you have a pattern that's going to give you a probability of, say, 8 times out of 10 that this pattern is going to work for you, guess what? Then you only trade that pattern. You don't get – this is where a lot of traders get wrong get their trading wrong, and where I've screwed up so many times is getting them based on what I think is a good idea, what I hope is going to be a good idea. That's not how really successful traders trade the markets. That's not how they trade the markets. They have their pattern, and they only trade that pattern. So they can see, like, guys, if I showed you my last 20 trades of the markets, you'll see they look almost identical to each other. Almost identical to each other. Now, there's slight little differences, but the overall picture looks the exact same. You'll be able to say, oh, look, there it is. Yep, there it is. Like, oh, I know exactly what I'm looking for. And 8, 9 times out of 10, I'm going to rock it out with my socks out. So my job is just to wait for that pattern to appear. And it doesn't matter how long I have to wait. My job is to sit on my hands and wait for that pattern. It doesn't matter if I get bored or anything like that, or if I'm trading 10 hours a day, trading the Forex market, I'm looking for my pattern and it hasn't appeared. No, my job is to sit there and wait for that pattern that I know is going to work for me and only take that pattern, the end period, do well. But all of us want to screw with us and try to get, we take 10 trades and every single trade is completely different to each other. No wonder we're not getting consistent results. The only way for you to truly get consistent results in the markets is that if you're consistent at trading the setup that you know that works. That's all it comes down to. That's the psychology. That's the mindset of a trader, is understand the win-loss ratio, but then understand the one pattern that you can rely on to 7, 8, 9 times out of 10 can work for you. So I hope that helps you out, guys. Guys, I really truly care about you guys. I really do. I really truly care about you, and I really want you to do well in the markets, and I'm trying to help you get away from that other garbage out there. And initially, trading is difficult, yes, because it's the hard part about trading is understanding what to really focus on and not letting this other garbage, affect us. Because what's happening right now, there's so many people talking about stock market crash right now. It's like there's nothing on there, including the most successful investor of all, one of the most successful hedge fund investors of all time, Ray Dalio. Once you understand the fundamentals, there's nothing here right now. So I hope that makes sense, guys. Heath Mixon. I have traded puts and calls. I would trade most of the time 3 months and less depending on what some trades in 2 to 3 weeks if I anticipate a move. Heath, that's where you're going wrong again, my man, okay? Heath, I hope you can understand that if you want consistent results, you don't get in based on what you think is a good idea. You know what I mean? You get based on a plan and a setup, a pattern, basically, with an entry to that pattern, where you know where the stop is and you know where your exits, and your job is just to be consistent at doing that day in, day out, and not to get in because you think something's a good idea. The way you're only going to be consistent long-term, Mixon, not just now, but for the next 6 months, 12 months, 6 years, if you want to consistently get bigger and bigger and bigger, potentially be a 7-figure trader, that's the way that you need to be. You need to be very consistent at taking the exact setup, the same setup every single time, and then you can keep going from there. Please try to stay away from that hoping and thinking and fear of missing out and all that sort of garbage, because long term it's just not going to serve you. You're going to be going round and 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 round circles again. And from that, it's just gonna you're gonna end up doing your head in, and you're not going to build confidence that way. What do you think these at the start of this session I talked about 3 guys over the last decade that I've been coached by and currently being coached by, multiple 7-figure traders. What do you think they all have in common? What they all have in common is they have confidence in the system. What gives them confidence in the system? They have confidence in the system, knowing that when the system appears, they know most of the time they're going to do really well. What do you think? Why do you think, to make some really good money from the markets, right? They wait for those positions and then they hit it very, very hard, having good risk management, but they don't hit it with a $500 trade or a $1,000 trade to see how it works. They don't hit it with a $5,000 trade to see how it works. No, they're hitting these trades with $50,000, $100,000, $200,000 a trade. How do you get to that point? You get to that point by being confident being confident in your system, by being confident. And if you want to slowly get to that point of potentially being a 7-figure trader, then you need to start with that foundation of what is my pattern I'm looking for? Okay, now I only need to trade that pattern. And you might start with a $500 trade, and then you might go to a $1,000 trade. And then you might go to a $5,000 trade per trade. Then you might go to 10 grand per trade. Then 20 grand, then 50 grand per trade. And then 100 grand, and so on and so forth. That's when I talk about, again, the common theme amongst my multiple 7-figure trader guys, my multiple 7-figure mentors that I've seen. That's the one thing they have in common that actually allows them to do that, is they don't trade a lot. They just trade the pattern they know that works for them, and everything else is just noise. And the more you can have that pattern that you know you can truly rely on, not just because someone's taught it to you, but you know inside your heart because you've done the work. Now, what I do with my private clients, is I get them to, when I teach them my system, exactly what I'm looking for. I teach them why it's so important. I give them a checklist. I tell them, okay, now your job is to go out there and do at least 200 screenshots of trades that happen over the last, 2, 3, 4, 5 years, whatever. On a daily chart, stock chart, 5-minute chart, doesn't matter. Your job is now to go out there and do 200 screenshots to build that confidence inside of you. Because once you know what pattern works for you, and once you know what sales work for you, it's not about trading a lot. It's not about being in the markets all the time. Like my current mentor right now, multiple 7-figure private trader, he trades the markets 14 hours a day. Do you know some weeks he's only and he's trading 5-minute chart or 2-minute chart, 5-minute chart, 15-minute chart, and hourly charts, and sometimes even daily charts. Do you know sometimes he may go through a whole week of 14 hours a day worth of trading and only take one setup. Some weeks no trades. But guess what? When he is trading, you better believe it's not just putting $500 a trade to see how it works. Like, no, he's hitting that thing hard. Because he has confidence in that system. That's what gives you the ability, guys, to really excel in the markets. And that's the most common theme out there. And I hope you can see that, guys, that, that based on the way the markets work and based on the trading is that, it's trading is simple, it's easy, it's fun. You just got to know one very, very high probability pattern. Understand if you have that, and that setup, to me, I want to hype it with my system. The reason why it's so successful is because I'm using what I'm teaching you based on the chart analysis. Then I have my system built into the way the markets work. And a lot of these trades have the potential to run on for very, very good profits. At least 8 times out of 10. And I know 20, 30, 40% of the time, I'm going to get a very, very good profit. So I hope you can understand, guys. So guys, if you are, by the way, guys, if you haven't grabbed, go to freewbstraining.com. to get your free trading course. And if you are interested in getting my coaching, guys, and you want to be interested in doing that, not only for this year, but for the next 12 months, like basically right up to the end of next year, then I am opening up a few spots to join my coaching where I'm doing weekly coaching with you, showing you all my trades and so on and so forth. Then just go to howtrader@gmail.com, HOWELL, trader@gmail.com. Just email me that there, guys, and I'll be happy to send you more information. And actually, what I do is I set up a time to actually talk with you. And then I'll see if whether we're a good fit. So if you want to do that, guys, that's how you can get access to me and have weekly live coaching with me based on stuff there. So Hal, HOWELL, Hal Trader, TRADER @gmail.com, and then we can set up a time to talk. And then I'm only opening up 5 spots for the next 12 months plus, or actually a lot more than that. But yeah, let's see how I go there. So. Can you point me in the right direction? Oh, really nice to meet another technician. Well, Heath, my man, Heath, once you realize there's the only thing you can trust right now, the only thing you can trust is the charts. You can't trust news. You can't trust people's opinions. You can't trust anything else out there apart from what the market is telling you right now. And if you want to go, when we're talking trading the market for an income, the only thing you focus on right now is the chart itself. But if you're focusing on where we are right now in the overall cycle, so you're trying to position yourself, maybe looking to buy property, sell property, buy some long-term gold, short-term, long-term gold, all that sort of stuff, then basically, Ray Dalio's book is going to really, really help you there. Let's go on here. I started before computers. Trade patterns consistently sounds good. Easier said than done. What is your favorite pattern, Jonathan? It's actually quite easy. We make it more complicated. Okay, the overall job there when it comes to a pattern, the overall job there, right? It's like, okay, here is the one pattern. And again, I'm not going to give away my pattern, guys, because guys, I have people investing in my private coaching, and I'm not going to give you all my details here because I can't. I've got to respect the people who spend thousands of $1,000s getting my private coaching. I teach them my pattern that I've learned, and I've spent hundreds of $1,000s on private coaching to actually learn. But the thing is this, guys, a pattern just simply means, okay, what does the pattern look like right now as of the time of entry? And you've got to have screenshots after screenshots after screenshots of what that looks like. So for example, guys, if I bring up, so let me actually bring this up here, okay? So what I mean by screenshots and screenshots, if I actually bring up this folder here right now in front of you guys, you'll be able to see that I have a couple of different folders here. All right, so you can actually see we actually have all these different things here. But as you can see, right, that if I look at all these different setups here and all these different folders here, if I look at, say, the 2018 bullish setups, look at all these screenshots, guys, of trades that I've taken. Now, guess what? Every single one of these trades, if I showed you, looks almost identical to each other. It's based on the pattern. All these trades here, boom, 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 boom. Let's go back to the bearish setups. As you can see, there actually hasn't been a lot of bearish setups, but the bearish setups are the exact same. So that's basically, what you're looking at there and what you want to see, based on that and based on, I even have things like I have a thing called, bad trades where, where it just wasn't a good trade or anything like that. It's like, what are you doing, guys, to, to set yourself up in a way where, in a way where you're getting some really, here's another thing here as well too. Taking screenshots, guys, is the most powerful way of actually getting ahead. So all you're doing right now, guys, is trading is simply, okay, I'm looking for this pattern to form in the chart, and I'm looking for this entry off this pattern. And I need to get in my mind, what does it look like today? So if I'm going to take a trade today, I'm going to go back. I'm going to go back to my list. It's like, okay, does the setup I'm looking to take right now, does it look like all the other trades that I've taken? Does it meet those rules basically? And if the answer is no, then I shouldn't take it. So it actually is quite simple. You just got to focus on that. Actually, there is a probability that gold market will bottom in December, so you could make a trading plan with that. No, Lane, no, please, Lane. I hope you can understand, my man. I can understand what you're saying there, but that's just one position, right? That's just one trade. You don't have a trading plan for this setup and then a different trading plan for another setup and then a different trading plan for another setup. It's like, no, because Lane, remember, right? We're after long-term consistent results, aren't we? How do you get long-term consistent results? How do you build confidence in the way you trade the markets if every single time you take a trade, it's completely something different? It's based on what you think is going to be a good idea. Well, the market's coming down to support right now, so if I buy it, here's my stop. That's my plan. Again, we're after long-term. When you trade the markets, you want to be in the position where you can be in something long-term, and you could build momentum and build progress on where you can get better and better and better and better at trading that plan and trading that setup. So 6 months from now, 12 months from now, you're getting so good at it that you can start to see massive, massive progress. I hope that makes sense there, Lane. Peter. First, pay off your house mortgage. Otherwise, the wife will be unhappy if you lose 20K and still be. Yes. Let's go here. My favorite pattern, Head and Shoulders. Taught my kids to pick them out. Fantastic, Heath. Fantastic. Now, Heath, when it comes to that, if that's your favorite pattern, Head and Shoulders, one, how do you qualify to be Head and Shoulder? Secondly, what is the entry if you are trading that based on the Head and Shoulder? And thirdly, have you taken at least 200 screenshots of that Head and Shoulder formation, of where the entry was, where your stop would be, and all that sort of stuff? Because if you haven't, then that's definitely where you need to be. Because guys, remember, this is how you build confidence in the markets. Confidence is not about knowing what's going to happen next. Confidence is saying, okay, I'm stepping up to the plan, right? I'm stepping up to this trade right now. And I know right now this could be a losing trade, but there's at least an 80% chance that this trade is going to run on for good profits. That gives me confidence to step up to this trade, the next trade, the next trade, the next trade. We're in uncharted territories with Trump, lol. Definitely not uncharted territory. No, definitely not. Go read Ray Dalio's Debt Crisis book and you'll be able to see it's the same shit all over again. Really, really is. Go look at all the big debt crisis out there. Again, go read his book. You'll be able to see that this is the same thing. We're not uncharted territories, or this is something different this time. Like this has happened. This has happened in the last 100 years, a couple of times. Germany in 1920, actually 1918. 1929 was a big debt crisis. That's the reason why. That's the reason why the 1929 stock market crash actually happened. Was because of the exact same thing that's happening right now. You can't trust Elon Musk. Yeah, well, don't trust anyone. Don't even trust me. Trust what the charts are telling you, though. Learn how to read the market. The trend is your friend. The high time frame trend is your friend. Yes. Tesla is good for swinging. All right. I asked about your silver projection because I am currently in USLV waiting on a reversal. I have lost my ass down 40%. Obviously, I'm a rookie and should have cut losses. Okay, so Jonathan, my man, Jonathan. I hope you can see, Jonathan, from things I've been teaching you in this session here about how you need to approach the markets and how you start to need to build a plan and foundations to start getting ahead, not just now, 6 months from now, 12 months from now, and so on and so forth. Make sense? So you probably got in based on all this other hype and crap out there that the stock market's going to crash soon and silver and gold's going to bottom soon and all this sort of stuff. You probably listen to, you guys probably know I'm going to talk about, but I'm not going to say his name again. But like, come on, guys, like, please, watch this session over and over again. After I finish this session, watch it over and over again, guys, because the stuff I'm teaching you, what I'm saying in this session right now, what I'm teaching you right now, guys, is the truth about the markets, is the truth about getting ahead in the markets. It is the truth about trading long-term successfully in the markets. And if you don't start building that foundation now, spending a good couple of months building that foundation of the things I'm talking about, like building your number one pattern and entry off that pattern, building a portfolio of screenshots of trades that happened in the past and see what actually happened afterwards, see where you've got to put your stop and where you're going to take profit, and being consistent at doing that. And only taking that setup that you know is going to work 7, 8 times out of 10 and getting out when you know you need to get out based on your plan, and staying in profit to let your profits run so you can get 3, 4, 5 times your risk on that. So if you're risking, you know, again, like with me, if I trade 2.5% or 5% of my account on an option, I generally risk 100% return on that trade. So I'm automatically knowing that 2 to 3 times, I'm going to be that position is going to be down. I'm going to lose that 100%, which is 5% of my account. I also do know roughly 80% of the time that's going to be up, and I know at least half of those 80% of the times I'm going to crush it. I'm going to rock it out with my socks out and do, you know, 4, 5, 6, sometimes up to 10, sometimes up to 15 times my risk on that trade. So if I'm risking 5%, and sometimes then I get it, and then a trade recently happened, like it made 1,500% return. Yeah, you had to be in the position for close to 2 months, but that was the trade setup. Guess what? You know, 1,000% return. That's 50% return on the account. That's the sort of setups that I look for myself personally. And I don't trade a lot. I just make sure that I trade with these. So, and again, you know, guys, that's what I teach. That's what I really, really focus on with my private clients there. I really focus on them. So, I hope that makes sense now, Jonathan, about things I'm saying in this session here. So the trigger is when the price action violates the neckline, the size of the head and shoulder tells us, and how far the move. Okay, Heath. So what you want to do, my man, is that if that is your trading plan, then again, you need to take at least 200. You need 200 screenshots. You need to, before you start trading live based on that, you need 200 screenshots of that exact one setup that you've traded that happened in the past. It could be a 5-minute chart, could be a daily chart, could be whatever. But you need that, build on that. And based on those 200 screenshots, now you know, okay, this is where I need to have my stop. And this is where I need to have my, because if it gets this point, like for me, I have like what I call like a no story exit rule. When I'm trading the Forex market and the futures and commodities and stuff like that, I have a stop loss in place. Okay. When I'm trading options, most of the time I don't, because I'm trading out of money options. If I'm trading in the money options, then yeah, then I have a no story exit rule. And so that's it. And you need to build this portfolio of screenshots, trades that happened in the past to build confidence of knowing when you get in, and also knowing when to get out of these trades well too. Like what are you going to use to let your profits run and keep your losses short? So that's what you really want to build this information. This is what I call the foundation to your success, guys. Okay, this is the foundation to your success in the markets. And if you don't build this foundation, and you're building and you're trading based on hope or what a YouTube video says or anything like that, long-term success for you is not going to be there, because you're not going to be making progress. How do you make progress in something? You start and you build on it and build on it and build on it and build on it and build on it. You don't start something and then a year later you're still doing the same thing over and over again, right? Hoping and hoping and hoping. So again, guys, you know, with my coaching program, I said before, if you go to Howell, HOWELL, trader@gmail.com, if you're interested in getting my coaching and learning my trading system and getting my weekly coaching every week and seeing my trades, then email me. We'll set up a time to talk, and then I'll see if you're good for one of the 5 people that we can go there. So love the information. Thank you for sharing. Much appreciated. No problem. I still like to look at the RSI and stochastics. Maybe that's bad. I like it. It reassures me. Peter, my man. How you doing, my man? The thing is this, Peter, okay? The thing is this. Are you using those things as a proven plan to yourself, Or are you using it because you just want more confidence in that thing you're about to take? Is that thing, is that trade, is that position you're about to take based on what you think is a good idea? And now you're just looking at the stochastics and the RSI to say, okay, yep, this is a good idea. Or are you taking a trade based on, yes, this is my plan, and I know this plan, if I take this setup, this is the exact setup, 10 times, 20 times, I know 7 times, 8 times out of 10 that's going to work out. You don't, because remember, stochastics and RSI, 80 to 90% of your decisions, right? Or for me personally, 90% of my trading plan comes from the chart itself, and the 10% comes from the moving averages and volume. When I'm trading the Forex market, 90% of my trading opportunity or my trading plan comes from what the chart is telling me itself, the pattern. I make sure that I'm trading with the high time frame trend, and then I use moving averages to confirm it. But I use that because it's based on my plan. It's every single time I trade at the exact same every time. But if you're trading a different chart pattern every single time, Peter, but you're looking at the stochastics and RSI for that setup, then you're never going to build. You're never going to you're never going to build that long term. If you're taking 10 trades and each of these 10 trades is based on something different, the chart looks different, it's a different thing, then again, because guys, what I'm talking about here is building long-term success. If you want to be one day potentially a 7-figure trader, as I said at the start of the session, I've been now very, very fortunate now to be coached and mentored by three multiple 7-figure traders. Currently, right now, I'm being coached by a guy who does multiple 7 figures per year. And the one thing they have in common is that they don't really care what's happening in the markets right now. All they care about is the trade I'm about to take, does it meet my proven plan? Yes or no? Proven plan. That means you've taken 200 screenshots of that one plan and of those 200 screenshots you can see. If you don't have that, that's where you need to start. That's the work you need to put into. What is that pattern? What is the entry off that pattern? Where's your stop going to be every single time? Not because you're guessing. It's like, no, this is where my stop needs to be. Where are you going to get out? What are you going to use to allow you to actually let your profits run and then cut your losses short? All those different things goes into your plan. As I said before, guys, like if I showed you my last 20 trades, they're exactly the same thing. Look, they look almost identical to each other. And my job, as long as I keep stepping up to those trades, guys, and that pattern, that's the reason why trading can become simple, easy, and fun. And trading can become simple and easy and fun for you as well too. Trading can become simple and easy and fun for you as well too. It's not the hard part is actually removing all this garbage. And for me, personally, Peter, I've been doing this now for 15 years. And Peter, for the last probably, it was only last year that I had to I let go of the stochastics. I was using the RSI and stochastics, but Peter, I realized that those things weren't actually helping me get some clarity in what I was trading. I was always, again, the reason why I say that, Peter, is because if you're looking to let your profits run, if you're looking to potentially, if you're trading options and I'm looking for a potential trade to do 1,000% in return, I can guarantee you that the RSI and stochastics will get me out way earlier than the market was telling me to get me out. And I may make 100%, 200% return on that trade, which is still a nice return. But then suddenly I realized these trades that I was getting out because of the stochastics and RSI were telling me, oh, we're now overbought, we should get out, the market's going to turn, and I get out, and then the trade runs on for a 600 or 700% return. The market was telling me it was going up. That's the reason why I removed those things, Peter. Because it was those things that stopped me from moving. It was these things that stopped me from achieving. Because guys, remember, we always want to be in a plan where we can let our profits run and cut our losses short. That's the whole foundation there. So I'm always looking for things, and I realized I was cutting my profits short by using those things. Oh, it's overbought right now, or it's oversold right now. I should get out. And I get out and like, okay, well, okay, that was a nice trade. And then just by watching the charts and using, say, a short-term moving average, that could have held that thing for another month. And then instead of getting out at 200%, I could get out at 700% return. Again, using options here, by the way, guys, which is much more highly leveraged. It's all important to pay attention to gaps up and downs as these form support and resistance levels going forward on a particular chart. Once again, Peter, it's not based on support and resistance lines. It's not based on gaps up and gaps downs and all this sort of stuff. Your only job, Peter, is this. Find your one simple pattern. One simple pattern. Remember, trading is simple. If I look at my past three multiple seven-figure traders, multiple seven-figure mentors, what do they have in common? They have a simple plan. It's all simple. It's all just it's simple, simple, simple. So your job, Peter, to move forward is to find your one simple pattern that you believe in, and you've got an entry off that pattern. Then your job is to take 200 screenshots of trades that actually met that pattern, that pattern formed on the chart, and take 200 screenshots. And then once you've actually started getting those screenshots, now you know exactly what to use to let your profits run, cut your losses short, where you need to be out of that trade, because you're not going to make a profit on every single trade. You're going to have your win-loss ratio, and it doesn't matter what system you trade, you're going to have your losers. And then your job, once you've actually got there, then start trading. Start trading very, very small amounts, maybe $100 a trade, maybe one contract, whatever, one share, and then start to build from there. And then your job, once you've actually got to that point and you've done all this foundation work, your job is to sit on your hands and wait for that pattern to form. And it may be a month before a pattern like a trade, like, because when I'm trading the daily chart, guys, sometimes I go 3 or 4 weeks without a trade. And then there might be, I might go my whole month without a trade. And then the next month, there might be 3 or 4 really, really high probability trades that come up. I don't know. My job is just to wait for those really, really high probability setups. And when I do that, my confidence goes up, my win-loss ratio goes up, my ability to be able to put on more money per trade goes up, and it's a snowballing effect on going up. That's the only way you can actually build momentum, is actually having that confidence. Like, yes, this trade I'm taking right now is a very high probability trade. You can't do that, but doing something based on what you think, hope, or fear. This is about trading the markets, guys. Remember, trading the markets. So trading can be simple and easy as fun once you know how to do it. Again, guys, that's what every single successful trader has in common. We're talking 7-figure traders here, guys, not the one that make $1,000 a day or whatever. Like, no, I'm talking about guys that crush the market, right? Crush the market. What do they have in common? One, they have their pattern, they have their plan, which simply means just a pattern on the chart and an entry off that pattern. And then they wrap it around with some trading rules to make sure, like I use moving averages and to make sure it meets that plan, right? I'm after my pattern and I'm after my plan. Then once I have that plan, and I know it works, and I've done all the work, and I've done all the foundations, and I've done all that back testing to build my confidence. Guess what? Then their job is just to take the trades. And the reason why they are successful is because they don't take anything else. Even if the market is booming or crashing or whatever, they don't take anything else apart from that one setup. That's the reason why year after year after year, these guys make more and more and more money. This is how the rich get richer in trading, because they just keep taking the exact same setup. But because they take the exact same setup, they know most of the time they're going to do well. And when they do well, their confidence goes up, their account keeps going up, their ability to put more money on per trade goes up, and they make more and more and more money. It's not because they're trading. It's not because they're trading all the time. Like, no. If you know anything about the really, really successful traders, is they spend more time out of the market than in the market. My very first multi-millionaire, multi-7-figure trader once told me, John, you are paid to wait and wait and wait and wait and wait as long as you have to until your trade appears. And if you're looking to get into a trade and there's some doubt there, don't take it. Don't take it. You need to only take those trades throughout the year that meet your plan 100%. And if there is, and if it doesn't meet your plan 100%, that you know that works, so you've done 200 screenshots and you've put all this work together and you've done all this here, then if you haven't done, your job is just to only take those setups. And if you haven't done that, then yeah. So many people, including myself in the past, where I've gone wrong in my trading is I have just been sometimes too impatient. Like I know the setup that I know I need to wait for, but it's been 2 weeks now since I've had a trade. Come on now. It's like, so what? It could be 3 weeks, could be 4 weeks, could be 2 months. But guess what? And then in the times when I know the plan I'm looking for and it hasn't actually turned up, now I'll go trade something that I shouldn't trade and lose money on that. And then that actually hurts my confidence. And this is how the rich get richer in trading the markets, because they know exactly what they're looking for every single time. And they're not going to trade anything else. So if you want to start making massive progress in the markets, use this training that I'm teaching you guys right now of how to get in the markets. Because again, guys, when I look at my 3, actually, I think there's a 4th one there. There's a 4th guy that I'm thinking of right now. He's not a multiple 7-figure trader, but he's almost a 7-figure trader right now. Guess what? They all have in common. They had their one pattern that they know they believe in, and they only trade that pattern. And they won't take anything until that pattern forms. The end. And the reason why they are so successful is not really because they're smart. No, is they have so much ability to sit on their hands and not do anything until that pattern forms. They could watch the market unfold day after day after day. Like me, I trade a 5-minute chart, a 15-minute chart, an hourly chart on Forex pairs. I trade copper, oil, S&P, all that sort of stuff. My job is until that pattern forms on any of those charts, a 5-minute chart, a 15-minute chart, or whatever, I trade that market, and I'm trading the stock market. Until that pattern forms on any of that charts, then I shouldn't be looking to get into the markets. This is how the people in the market surely get ahead, guys. This is your foundation to your success. And once you start to build this foundation to your success, if you want to start to make massive progress in the markets, if you want to know how someone can potentially take a $1,500 trading account and turn it to $2.5 million or $2.7 million in about, I think, 2 years, which actually my second millionaire mentor did, you'll know. My very first millionaire mentor started the trading account with $5,000, blew that up. Started another trading account with $5,000, blew that up. Started another trading account with another $5,000, blew that up. And then actually, no, the third time he came back with 5 or 10 grand. Then he got it, and he slowly started trading. Now he was very confident, so he was trading 20% of his account on any given one trade. He was trading in the money. He was trading in the money options. He was risking roughly 30% was a loss. Or 30% was roughly a loss on his trades. And he just started growing his account from there, trading 20% and only taking those setups. Guess what? 3 years later, he made $3 million. How does someone do that? But just by sticking to it and only taking those trades. And when you're taking these trades, you know they're going to work most of the time, your account starts to exponentially grow. And it might look slow at the start, right? It's like compounding growth. It may look very, very slow at the start, but then, a year from now, 2 years from now, 3 years from now, if you're sticking to that and your only job is to get better and better and better and better at identifying that pattern on the chart in real time, and your only job is to do nothing. I don't care how long you have to wait. You're a waiter. That's right. You're a paid to wait. And the reason why most people don't do well in the markets is because they do none of this stuff that I'm talking about right now. And that's one of the reasons why I wanted to do this session with you guys today, is because I really wanted to serve you and help you guys. I see so many people approaching the markets completely the wrong way. Like they're focused on indicators. I'm telling you right now, indicators do nothing for you. In fact, they actually hurt you. They'll get me out of these trades that the market was telling me stay in. You know, let this market run on a little bit more. So I'm going to finish up there, guys. I hope you have an amazing week ahead of you guys. As I said, as I said before, like I don't really do a lot of these YouTube videos anymore. I love doing these videos because I really love helping and serving you guys and the things that I'm really, really learning from these markets and really understanding about how trading the markets work and so on and so forth. I really, 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 really do hope that you guys, you know, start to work on that foundation. Exactly what I've been talking about in this session here. You can do so well for the markets, guys. But if you're not willing to put in that work, and who cares if it takes you 3 to 6 months to actually to completely get all that, you know, done, where you find that one pattern that you can identify. You have your setup, you have your plan around that pattern. If you haven't done that, if you haven't taken at least 200 screenshots, now why are we taking 200 screenshots? That's going to build you confidence. Okay, guys. So guys, have an amazing week. Once again, guys, if you do want my coaching, or firstly, my free trading course is freewbstraining.com. If you do want to get part of my 5 spots that I'm opening up for my coaching, that's for the next 12 months plus, and that's been weekly coaching and all that sort of stuff, then email me at haltrader@gmail.com, haltrader@gmail.com. I'll set up a time to talk with you and we'll see if we're a good fit or not. But there's only 5 spots I'm opening up. So anyway, guys, have an amazing week, guys. I hope you do well. And I hope you start to think about your future in the next 6 to 12 months, where you want to be, and start to do that work right now. All right, guys, speak to you soon.